Happy New Year, and thank you for watching our first quarter investment update. I'm John LaBarca, Director of Investments here at Vision Capital. A lot has happened since our last update. Economic growth improved recently after a slowdown in early 2024. The residual effects of pandemic stimulus continue to support the economy through elevated inflation and higher interest rates. Personal consumption and government spending were both positive surprises for economic growth in 2024. The U.S. consumer remains strong overall despite inflation and higher borrowing costs. Job additions and openings normalized in the second half of 2024, but have stabilized more recently. Inflation has settled in around 3%, a rate that is much higher than what we've experienced in recent decades. Progress bringing it down has stalled in recent months. The Federal Reserve has indicated that their job is not done, and they may not bring interest rates down much further, as was previously expected. Can inflation get back closer to 2% while the economy remains strong? The answer will depend on productivity. At low levels of unemployment, higher productivity will be the only way the economy can grow sustainably without triggering higher wage inflation. As we can see here, outside of very brief periods, we have not experienced a prolonged period of high productivity in the U.S. since the 1990s tech boom. That era was driven by the widespread adoption of personal computers, email, and the internet. Investors have high expectations that artificial intelligence advancements will drive a similar boom in productivity in the years ahead. This can be seen in the strong performance of all stocks tied to AI offerings. For this to occur, the benefits of AI must broaden out to a wider range of companies and users of AI tools. So, how will the election results impact the economy? We can expect some deregulation similar to 2017. Policies that limit immigration or impose tariffs would likely push inflation higher. We expect tax reforms to at least extend the prior Trump tax cuts. However, elevated federal deficits and debt levels may prove challenging for significant policy changes. So, let's review how markets performed. The fourth quarter brought mixed performance. We continued to see gains for the largest U.S. companies. The S&P 500 rose just over 2% in the fourth quarter and ended 2024 up 25%. It was the best two-year period in almost 30 years. Large cap performance was very narrow in 2024, with the Magnificent Seven stocks accounting for more than half of the index gains. Smaller U.S. company stocks and most international stocks declined in Q4 and lagged large caps significantly for all of 2024. An increase in interest rates hurt bond performance. The fourth quarter's 3% loss brought the bond index returns to just 1% for 2024, for another disappointing year in fixed income. As we've said throughout 2024, we still see opportunities in small cap stocks that continue to lag behind large caps. We see here that the small cap index has now underperformed large cap stocks in 7 of the last 8 years. The last time we experienced something similar was in the 1990s. After that period, the small cap index went on to outperform large caps for 6 straight years. Historically, extended and material periods of underperformance in an asset class tend to swing in the opposite direction. It's impossible to perfectly time the start of those reversals, but they often begin when one asset class becomes significantly overvalued relative to others. Let's turn to our outlook. We expect economic growth to remain solid in 2025. Moving beyond the election should help confidence, as should pro-growth policies. We anticipate returns for both stocks and bonds that are close to historical averages. We do expect a broadening of stock performance. We have increased weights of small cap holdings in portfolios in anticipation. We expect to invest cash as we see volatility and where expected returns are most favorable. Thank you for joining us for our investment update. We wish you all a prosperous, healthy, and happy 2025.